Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for July 15th, 2025. What a crazy day. Um, I didn't feel much pressure during the day. Stocks were up and down in my account. I was pretty much around break even. I left my office at maybe 3:52 because I wanted to hear John Person talk at the Wealth 365 event, and I wanted to get into my car before he started. And what happened to the market in the last 5 minutes? So it really opens the question, will an ugly close lead to more selling? Again, my email address is marketmripro@gmail.com, and the best way to interact with me is through my Google group. Since the market's closed, we've had some more tariff news, and the markets are trading down. But really, as I look at them, the thing that's really, maybe it's catch up is the NASDAQ is down about 70 points, the futures. So maybe that's catching up to the rest of the markets as the NASDAQ, led by NVDA, which didn't have a great close either, ended up finishing higher on the day. So let's go ahead without further ado. This is for educational purposes only. Anything we talk about should be taken in the spirit of education, not investment advice. 10 of the videos to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And remember, I made my living by giving chemotherapy to cancer patients. I'm not a financial advisor. And I have tools for multiple platforms, but am an independent trader. My Google group is called Top Down Trader. It's free. Often I won't post these on YouTube. I'll just place them in the Google group, especially when I'm short on time. I have interaction during the day at times when the market's doing things, and I give discounts on my tools, and I do some Top-Down Trader Google group only free education events. So it costs nothing, and you get lots of value. So think about joining. Well, CPI actually didn't hurt the market today. In fact, the market was up at the open. The CPI came in, and I guess it was close to as expected, maybe a little bit lighter on the core. Don't forget, tomorrow we got the PPI, and we've got some industrial production and a bunch of Fed heads. So this is a week of data that I think the Fed's the last week of the month that may influence the Fed on what decision they're going to make. And obviously, there's a lot of presidential pressure on Powell to cut. The rest of the world seems to be cutting. We're like the last ones. But I think that tariff overhang continues to be the issue. But after the CPI today, the odds kind of got more even about to cut or not to cut. I think if the PPI comes in weaker than expected, that might give us the push for a rate cut. I'm concerned because that 30-year, which I talk about when it gets above 5, it's above 5. So big news, big earnings on Wednesday, both before the market and after. Bank of America, Goldman Sachs, J&J, Morgan Stanley, the biggest of the bigs. You got some airlines and a lot of regional banks after hours on Wednesday. Kind of a yawner after hours today, Tuesday. It's a judgment call to hold stocks over earnings dates. And as I like to say, it's just bad judgment to not know when your stock's earnings date is scheduled. Hasn't broken. I thought the index would have broken today and I'd be hanging the crepes. So let me tell you two things on this chart that stand out to me and will validate the first one on the Market MRI Pro tool. There was no Hindenburg omen this week. Why does that matter? If we're topping and we're rolling over and we're going to have a hard sell-off, it would be unusual for that to occur without a Hindenburg omen signal. In fact, there's not been a major market sell-off since the Great Depression that was not preceded by a Hindenburg omen. The problem with the Hindenburg omens is they don't always mean a whole lot. But you could see this sell-off here was preceded by the Hindenburg omens. I guess this sell-off here, certainly if you look at the 21 going into 22 top, lots of Hindenburg omens. So we don't see one. That's a good sign. Okay, you don't have major market sell-offs typically without seeing that. The other thing is we just got a long-legged doji. It's hard to see it there, but a long-legged doji sitting on the 17-day. That's clearly not a broken down index. It could break down tomorrow, but it's not broken down tonight. Any information you want, if you have challenges installing Market MRI Pro or having any error messages, coding at marketmripro.com will get you to Praveen. If you're interested in the product, you want to know pricing, you want to know what deal you get because of things you bought from me in the past, and I'm pretty good about that. I'll give you some credit. It's marketmripro@gmail.com. And again, consider my top-down Google group. All right, enough slides. So I actually finished my looking at this right before I came on, and you could see the NYSE just had a dive. Okay, traditionally the Hindenburg-Omen is calculated on the NYSE, and if I go some to the left and you get up to the prior highs, you'll see Hindenburg Omens. We don't have one here, and that is potentially meaningful. Now, the NASDAQ is not classic for the Hindenburg Omens, but I think about how our markets have evolved. There's very few banks and oil in the NASDAQ, but there's a lot of tech, and the NYSE doesn't have a lot of tech. So I think you need both to really cover the whole market. And the NASDAQ, first of all, it finished up today. This is the composite. It gapped open and closed barely positive. Here is the NYSE. It opened down a tad, tried to trade higher, and closed at pretty much at the low of the session. No Hindis on either of them. From a volume perspective, according to Market Surge, which is what I use as my reference, both about average volume today. If you're worried about getting overbought, you had pretty significant drops in the number of stocks in each index trading over the 20 in green, the 50 in white, the 200 in red. So that takes some of the luster off. You could see the new high, new lows are still positive. The AD lines were negative, as was the up-down volume. So we'll come back to breadth in a few minutes. Let's just go back to the daily briefing. But that was the first thing I wanted to see was, did we get a Hindi? So this is the performance of the major ETFs that I like to follow during the day. The dollar, which we talked about having perhaps a major breakout from a descending trend line, continued higher, but it's still pretty low in its pattern. The Qs were the only thing up 0.09%, and you could see they finished at the 1% of their closing range. All right, so they were as high as 0.79, and they finished at 0.09. The spiders were down 0.43. VIX was down 0.5%, which is nothing, right at the higher part of its range. Then also finishing at the weakest part of its range, which means closing at the lows. The diamond's down about 1%, and the Russell down almost 2%. That is a weak market, and it was weak, but it wasn't that weak until the last 5 minutes. If we look at technology, and you could see that was the only thing that was up, and I think what drove it was the AI and China trade, especially with the fact that NVDA is being allowed to sell its second-class chips. I'll use it at this in China. Now, the interesting thing is when Trump said they couldn't sell them, the market sold off, and then it recovered because those chips are not their best chips. They're not the Blackwell. Well, today it ran higher on that, and then it pulled back into the close, still finishing higher, but with a gap up doji could be the beginning of something ugly. Everything else was down. Biggest down was materials, healthcare, financials, discretionary, even energy was down almost 1.5%. If we look at themes, the best theme was China discretionary, semiconductors, data centers, clean tech, social media, artificial intelligence, and there's your uranium and renewable, and now we're getting down to just small moves. As I mentioned, the new highs minus new lows remain positive at 1 year on both the NYSE and the NASDAQ, but they've come down. Here's, I think, the strongest message I saw. No sectors were positive in the S&P 1500. Only 5% of the industry groups were positive and only 8% of the stocks. It's really hard to make money long trading S&P 1500 stocks when only 12 of them are positive or 8%. Similar on the NASDAQ, nothing on sectors, a little bit better, 15% of industry groups, and 24% of the stocks were up, significantly better. And the NYSE is in the middle, similar number, 7% of industry groups were up, but more importantly, only 16% of stocks. So it was a rough day in the market. I don't think there's any ifs, ands, or buts about it. Was it rough enough to flip the timing models? Not yet. The weeklies take a lot to change. You can see each of the prices are well above the yellow line, which is the 30-period weekly WMA. We'd have to get down to here to flip the timing model. Probably not going to happen. And you could see the spider, the Qs, the diamonds, and the Russell are still green on the weekly charts, and all their bongos are still bullish. The dailies will go first. So if we look at the dailies, come on, switch to dailies. First thing I notice is that on both the Russell and on the Dow, the bongos turn to red. But you still have to close below the daily 30-period WMA. So we're close on losing the Russell and the diamonds. But as long as those weeklies stay positive, you're still pulling back in an uptrend. Now, if we see Hindenburg omens tomorrow, I'll start getting more nervous. Although you need a second one within 30 some days to confirm it. You could see breakdowns on the spiders, not on the Qs, failing at resistance on the diamonds, and a bearish engulfing pattern on the Russell. Not a pretty sight at the close. If we look at the US index ETFs, and let's see if I might regret trying this, but let's just look at a minute chart. Oh, like I said, I hope I don't regret doing that. It may take a few seconds to load. Let's see if we can get a minute chart out of this. All right, look at, here was 3 o'clock, a drop, a base, and here's the last 10 minutes of the market taking a dump. That's the spiders, the Qs, the diamonds, the Russell, VIX moving higher, and the dollar, hard to interpret that chart. So the markets really responded in the last 10 minutes to something with a pretty significant sell-off. The question is, where do we go from here? Again, the futures at 845, as I mentioned before, the dominant to the downside was the NASDAQ, but the Russell's only down 3.5%, or 3.5 points, not percent, God forbid. So we'll see what happens. We look at the daily spider, seasonality still okay, but we're about to go to a period of time through October where seasonality is kind of flat. So it really is the right time for us to see a modest correction or perhaps just a sideways consolidation with continued market rotation. So here is the prior highs. Here is the 17 coming up. Here's the 50. Here's the 200. So we've got a number. We got a gap in here as well. A number of potential areas of support. So would I be surprised if this pulls back? No, I expect it to pull back a little further. I'm hoping it bounces off the 17. By the time it gets up here, perhaps the 50 is getting closer. But I do think this is an area that will potentially hold. But I'll trade the market I get, not what I think we're going to get in advance, because I don't have a crystal ball. But obviously a bad session, down 0.43, I think it said, and not quite a bearish engulfing pattern, but close. Ugly candle. On the Qs, very similar story, except maybe a little bit longer seasonality holds up, but then it goes into a period of sideways to down. So I think the same story. You've got your golden cross here, you got your 17, your 50, and your 200. You've got 3 strong areas of potential support. You have a prior high in that area, I believe. Yep, which was a double top. And you might expect some support there. So a pullback into that area would not kill my enthusiasm for the rest of the year, but it will be, could be hurting your accounts, especially if you're like me and trade a lot of options. The diamonds, take a look at the diamonds, and the story is very similar, except it's almost to its 17. It's formed a line of resistance. It's pretty much in the area of flat. So seasonality is probably not my friend again on the diamonds until I get way, way out into October, November. That's October when it starts to head back up. So um, we'll see. I think the diamonds hopefully will bounce off the 17, and maybe that'll give us insight into what the rest of the market does. But I think that'll be interesting to see. If we look at the Russell, which had been the weak child, still hasn't taken out anywhere close to prior highs, which I believe were up here. Um, the Russell struggled at the 200 and broke out. Look, I really think the Russell's got a good chance of coming back and retesting at that 200. Now, a hold and a move higher would be a very viable move. Maybe it holds at the 17. But there's definitely some damage to the market in the last 10 minutes today. Volatility, I mean, again, the damage occurred near the end of the session. Whoops. All right, all else fails, you go up to here. Make sure we're on the daily charts. Get a little bit more. Oh, let's go into 150 bars. All right, and what we saw was a up 1.1% on the VIX futures. Here's the dollar on the daily. And I've been playing around with this trend line. I don't think that's the right trend line. So let's kill it and let's look at some alternatives. So I've been looking at this and going, all right, if this was the high, that was the most recent high, I think that's the trend line. And you could see I could maybe even move it lower if I wanted to, but somewhere in there is a trend line. And it's failed and failed and failed and failed, and it's broken out. It also broke out above the 50. I wonder if the next stop isn't heading up to that 200 day. Now, in the bigger picture, the dollar is way off of its prior highs, but it's also way off of its lows from 21. So that'll be interesting to see what the dollar does. So today the market was kind of a risk day. If we take a look at commodities next, and we'll do this a little bit quicker. I don't need to blow these up. Gold is consolidating on the 50, was down a bit, down 0.42. Silver looks like it's flagging after setting multi-year highs. It was down 1%. Oil came down with the doji in the market, 0.48%. Natural gas is bouncing off the bottom. And here's the part that worries me. Here's the 30-year up 0.86%, taking out the 5% level. You could also see a strong day in the 10-year. The rates are not the U.S. individual investor's friend right now, unless you're carrying rate-yielding instruments. We'll have to see what happens in the market after PPI. Buckets, clearly a shift to the left. The number of the stocks above or in the higher part of the Bollinger Bands move to the left. And we're starting to see 9% of the NYSE below, 11% of the S&P 1500. Looks like about 7% of the NASDAQ and a little bit higher, 10% of the Russell 2000. None of them are a signal that this is over. Each of them are a signal that, in my case, I get a little bit concerned. If we already looked at the market breadth, if we look at the new high, new low, it's way come off, so that's not a signal anymore. You can get a sense here with the daily charts of how significant the moves were. And you could see the RSIs are just dropping, but I think this is a case where the divergences played out. So how much lower do they go? My guess is they don't go below the prior highs, at least on the NASDAQ and the SPDR, and I think there's some very obvious areas of potential support on the Russell and on the diamonds. So if we look at the ratio charts just to get a sense of what's working, what's not working, even Bitcoin, which has been a darling of the markets of late, came off of its recent highs. Technology even continued to go higher, and pretty much weakness everywhere else you see. Communications, maybe a little bit of strength, and industrials has been holding up relatively well as well. So let's go take a look at there's my favorite thing you don't want to see in TradeStation, hence why I've moved off of it. Except for the scanning and the radar screen that I do a few things in my app. So here's the JAS layout, 3,759 stocks, which means NYSE, NASDAQ, and Amex. There's that many, more than $1 and 100,000 shares. I mentioned NVIDIA. Let's just put an hourly chart on NVIDIA. And you could see gapped up, hit the highs early in the day, and trailed back. Now, it didn't close below the gap point, and that's important. But it was still up 4.65%. It still is a market leader. But the fact it couldn't hold is a little bit bothersome to me. Let's go into the top down, and let's take a look if there's strength anywhere. Now, I could be looking for shorts here, and I can tell you over the weekend it was really easy to find shorts. But I have a hard time shorting at all-time tops when my market signals have not even flipped on the short term to a sell. So technology led, even though it was negative, followed by utilities and staples. That gives us 829 stocks. There's only a few of these that are positive. So tobacco, consumer electronics, semis, gaming, renewable, software, and beverages. I'm not going to go into the ones that were down, although computer hardware was kind of flat. That brought me to 276. I could look at my $5 and 500,000 shares, brings me to 165. So these would be the leader's opportunity based upon what led today. Just look at a couple. ZEPP looks like something buyout or something. Let's see, when were earnings or our earnings? Earnings were March 26 of 25. Well, right now that's a bother to me. And if it's not reporting earnings, and let's see if there's any news to report August 3rd. Smart trading. Sounds like Fitbit type competitor. No, thank you. Fusion full green. I mean, I don't. Something happened interesting, but it can happen without me. OSS One Stop Systems. Now, that's a nice looking chart. Uptrend, pullback, cup, handle, breakout. Lots of blue, relative strength in OBV, volume. It's getting extended here. It's at 100. That might bother me out of curiosity. Anything in here? Last earnings. So earnings are out in August. Doesn't make money. 70 million market cap, small cap stock, and innovative medical imaging. All right, Billy. Billy. This has been an interesting stock. I believe it's a Chinese play. It has my earnings. Great earnings per share growth. Why? Because it's a turnaround. I like that. I've got over a month to my next earnings. It's also had revenue strength with growth. That one doesn't look bad. It had a gap. It had volume, breakout momentum, had a CPR a day ago. The EMS went positive back here. Relative strength in OBV. If I felt the need to chase stocks in the current market, that might be one I look at. Super Microsystems, one that historically was tied very much to NVIDIA before they had some issues with complaints of fraud and stuff. Um, Not necessarily any of that's true, but this thing, after a pretty substantial drop from here to here, and this is after a massive split, um, it's trying to recover. And again, you had a CPR, had an EMS, you had a breakout in volume, and relative strength and OBV are starting. AMD rode the NVDA coattails today. Had opening up the China markets is good for them as well. A nice breakout. Earnings on AMD are the 29th, so 2 weeks from today. 54 cents is coming in against 69 cents, so that's not a good earnings growth. 585 versus 741, that's a pretty significant growth there. If it gets a surprise, it could run. Again, hard to be chasing things right now. Brookfield Renewable Partners, you can see seasonality plus minus, had a nice breakout. Again, all the dots, gap, volume, breakout, momentum, relative strength, and OBV. Looks great if pays $1.45 on a $27 stock, so that's got to be like 4%. Oh yeah, tells me right there, pays 16%. It doesn't make sense, does it? On a $20 stock, 5% would be $1. So it's closer to 5%. Um, CoreWeave had some news today, if I remember correctly. $6 billion data center investment. Um, this one, unfortunately or fortunately, if you're holding it, just had a massive run and it's correcting, but it had a big gap up today, strong day. Again, another stock closely related to NVIDIA. Navitas Semiconductors, BEPC, another one of this very similar to the BEP that we already talked about. And then here's our friend NVIDIA. We already talked, big gap up, a doji close. Um, it's all set to have an evening star and gap down in the morning. I hope it doesn't, because I still have a lot, but maybe NVIDIA is about to take a breather up here. Don't know. Futures are showing no big change. ARQQ is one of the quantum computers. This one is kind of an interesting pattern here. After a big move up, kind of like a flag, or is it some kind of a wedge? That would be interesting, a break above. Short term, the seasonality looks okay. Keep in mind that all of these quantum computers, they have their issues. They don't make money. They may not even have much in the way of revenue. Um, so they're probably a future, but the problem is which one. And then with TSM, Taiwan Semiconductor, the nice thing about Taiwan Semiconductor is they probably win whether it's NVIDIA's chips or AMD's chips that are being used. And here was a big breakout of a short flag. You could even say similar to the last one. Whoops. All right, I got to fix that. Pull this thing down. Pull that one up. Whoops, not that one. Kind of a wedge pop on decent volume. I mean, that looks very interesting as well. So it's pretty clear you got some infrastructure plays and a lot of tech were the ones that were up today. And again, we'll look at some other tech in a few minutes. What else can we do? Let's stop the top-down stuff and let's go look at the big cap tech plays. Amazon is one that I personally am in, talked about the last couple of days. Kind of boring, gradual move higher. It was up despite the market. APP teased, had a really good day on Monday until it got to the 50. And Tuesday it gapped down, although it closed up off of its lows. I know it's not a FANG, but it's been a nice mover. Google reminds me a lot of Amazon, and now that it's cleared, this area of resistance might be worth looking at. Meta pulled back today, but pulling back from all-time highs in this market. with a big run on a market that's been relatively flat over the year to date, giving us perhaps an opportunity to break out above the flag. Microsoft, oof, neck and neck with NVIDIA to see who's going to have a higher market cap. 3.3, almost 3.4 billion. Wow. Netflix, Netflix, similar to Microsoft, big leader in the midst of a mild correction. Looks a lot like profit taking, probably the same thing, kind of with the flag formation. And then Tesla is a little bit more complicated. Unless it closes above the 200 with some momentum, I'm not going to touch it. But this one still has to deal with the Trump v. Musk. But it's hard to not want to be a fan of Elon Musk. He's got to be one of the smartest people in the world. Even if he was really weird when he did Saturday Night Live. Impulse is back to my big list. Let me just do a couple of bottoms up scans that I like to do. I like to go in and do $5, 500,000 shares, pull back an uptrend, and then hit OK, rank them by up dots, and see if anything that's not too far gone looks interesting. Beijing, or now it's called B1, Chinese pharma company. They got some great products. Look at the seasonality. I think the entire pharma biotech complex is risky, and which is why it's not performed well, in my opinion, because of Trump's declared war on drug prices. And I'm not sure he's wrong, but that's B1. Here's a smaller biotech, don't know anything about it. Baidu, remember China was strong. Now, is it different this time? I mean, this thing's been in chop forever. And, maybe I'd like to see it clear that trend line before I get excited. So you've had lots of these moves with lots of blue dots over and over again. Each one's failed. So maybe if you take out this trend line, we pay attention, but right now I wouldn't. This was Weibo's, another Chinese stock. This one proved to me that fundamentals don't always matter because this one sold off while its earnings were still going. A bit of a stubbed your toe. Growing, decent earnings percent growth in May. Surprise revenue, not much growth. Doesn't seem that exciting. Why was it up today? Because big move up on volume. Got an EMS and a CPR. Volume breakout momentum and relative strength and OBV are starting. There's your Billy. One that John Person talked about today was Twillo, and that looks great. I mean, he's already been in it. And it's well off the lows, but boy, what a nice move with good volume, breakout momentum, relative strength in OBV. Here's Taiwan Semiconductor, here's SMCI, here's AMD. So, some of these look interesting. I think Baidu's worth watching, but let it take out that trend line. Twillo looks good on communication services. If you want to go into biotech, B1, ONC looks good. Now, remember I said I'm a cancer doctor, oncologist, ONC. That's what the ONC is from. They are very active in the cancer medicine. And lastly, let's just look for my favorite scan, which is 2-day momentums. To have momentum 2 days when we had a day like today, probably could be many. All right, National Fuel Gas, beautiful uptrend, pull back to the 50 and a breakout. Massive volume, gap, volume, breakout, momentum, 2 momentums in a row. Recently came out of a squeeze. PSAR reversed. Relative strength and OBV looks good. Now, the high jump is high because everything was so close together. I think this looks great. I don't know what they do. We have $1.48 versus 99 cents, so that's like 50% growth. We're going to have 59.86 versus 37, which is about over 50% growth. We'll see if they have surprises. Earnings are July 30th. I may have found an energy stock that looks interesting here, NFG, and I don't think it's in the uranium place. KC, Kingsoft Clouding, so a software stock had a beautiful runoff and a sell-off. I don't know anything about this company. It's Chinese, we can see that. Cloud player. But it had, again, it's another Chinese stock with a big breakout today. And we can look and see earnings are August 19th, doesn't make money. Now, if it actually had a revenue that grew that much, I'd be buying it too. I'd probably go to another resource and check that out. But that is Kingsoft. So this is a speculative Chinese software company. TPB, Turning Point Brands, is that a tobacco? See, as a cancer doctor, I can't buy tobacco stocks. And I think this might be lots of smoke-free, maybe it's smoke-free products. Maybe I can buy it. It's good stuff. Pays 29-cent dividend off of 80 cents. So 1% would be 80 cents. So it's about a half a percent. Not much of a dividend. But sideways move and a breakout. I like it. Good volume. Blue dots, relative strength OBV not extended. So if it doesn't sell tobacco and it sells anti-tobacco products, that might be something I would look at. I mean, it's got my favorite signal, which is those two momentum dots. RDAG, it's an IPO and doesn't look that pretty right now. And then CAI International, I don't know what's going on with this thing. Something looks very weird here. Oh, this. All right, so what you probably have here is a IPO that occurred here, which was Keras. I just wonder. Oh, here it's July 25. This is what happens when they recycle. This is an IPO Keras stock on April 10th, 2025. It's kind of in the same space. I guess that's what this is. As Tempest. Momentum returns into IPO market June 20th. Um, that must be what this is. Yeah, not that candle. There's your IPO candle right there. All right, so Keras Life Sciences, not right now. So I look at this, NFG, add that to the list, and Turning Point Brand. So if the market likes the PPI and the market trades higher, probably won't matter what you buy, we probably get a rebound. If the market doesn't like the PPI and it falls hard, probably doesn't matter what you buy, it's probably going to go down. But if we get a decent move off of the open with a PPI that doesn't disappoint, I gave you a bunch of names that I'll be looking at. Have a great day. And, we talked over the weekend, one of the ones we worked up and didn't had a bad, not a bad day today, but like the rest of the market pulled back. But this was the candle on Monday with LEU. I know several people took it. I took a trade on it. And maybe when I do the second video on Sunday coming up, I'll show you how I've already gone in and took advantage of the move and adjusted my trade. Thanks, everybody. Sorry it's so long. Sometimes I just don't stop talking. Just ask my wife. She will verify.